Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Welcome to the market recap video presented by Tackle Trading. My name is Coach Matt Justice that is, and I'm here to bring you the market recap video every Monday over there at tackletrading.com. If you're looking to get in the game, learn how to trade, learn how to invest, learn how to protect your retirement, get in the game there with tackletrading.com. Become a pro member, check out all the scouting reports and everything else we do, including the Tuesday night coaches show where we detail everything that's going on in the market on a weekly basis. But in today, let's start with crude oil. Crude oil was all over the news coming into the weekend. There was a widely anticipated event between the members of OPEC and non-members of OPEC, who are oil-producing countries, looking to make an agreement to freeze oil for the first time in 15 years. And it looks like this was kind of just a let's dot the I's and cross the T's, and let's get out there and let's put a freeze in the oil market. And all of a sudden, things started to really kind of behave badly come Sunday morning, when Saudi Arabia started getting very concerned about Iran's participation, whether or not they're going to freeze or not. Iran had to come out and said they were not going to freeze, and so Saudi Arabia got concerned about that. And one of the reasons Saudi Arabia gets concerned about that is because if Saudi agrees to freeze and OPEC agrees to freeze oil production, meaning cap the limits to a certain extent, Iran for the first time this year is now producing oil and selling it to the world for the first time in decades. And Iran's going to increase their production. Saudi's going to cut back. That's not going to be good for Saudi or what they've been trying to do with their market share in the oil market for the last year and a half. So the talks began to kind of break down. And Saudi came with a couple of the partners, including Russia, came to discuss with Riyadh and with Saudi Arabia, and they discussed a deal that could be a non-Iranian deal. And Saudi Arabia agreed to that, and so it looked like again the deal was back on for a freeze in the oil market with OPEC and the non-OPEC producing countries, including Russia, the United States, and so on and so forth. However, that broke down as well, and at the end of the day, Saudi Arabia pulled out. They decided it was not in their best interest to have an agreement that allowed Iran to continue to full board put out oil out there, while the rest of the countries that produce oil were putting a freeze on production to a certain extent. And wow, if this would have happened when the market was open, it would have been fireworks. But alas, it didn't. It happened when the market was in fact closed. But it doesn't mean the market wasn't volatile today, as you can see. Coming in on Sunday at the very, very beginning of Sunday. Here's oil on the close come last Friday at 5 o'clock. Really kind of neutral between 40 and 41. Not a lot of action in any capacity, and then boom. After the deal between Saudi Arabia, Iran, and the other OPEC nations fell apart, you see it really get pushed down in the first 5-10 minutes of the opening bell. But then it just shockingly rebounded and has been actually trading above the close on Friday. You're up about 41, 49 so far today, and it really is quite a surprising turn of events here. It was coming in, and many of you know that I own oil. I own USO. I own shares of USO. I was concerned about that coming into Friday. I chose not to protect it because I thought a deal was done. It wasn't. I didn't really see a lot of risk there. And I saw upside potential. I saw the probability of upside potential being greater. I'd also sold call options, so I was protected in that capacity to some degree. So I wasn't concerned. But wow, was I a little shocked today to see what oil did after the open yesterday. And sometimes, guys, and I got to be perfectly honest here, sometimes the professionals were like, I don't understand it. I don't get it. It makes no logical sense. A deal that was priced in is no longer priced in, and the market actually responds favorably to that. It's almost like the market is anticipating further tension between Saudi Arabia and Iran, and we all know what tension in the Middle East does to oil prices. So sometimes it takes logic out of the equation, but that's giving you an update on oil. Look at oil right now, kind of struggling at that 42 area. If you own USO, I would probably look to at this point sell call options as it holds resistance. If it ever breaks resistance at 42, you can pull those back off the table. If you ever see some downward movement at 42, you do have some downward pressure here. 42 has held for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. 42 is a very, very strong resistance level for that. So watch that level. If that level doesn't hold, if you want to take some cash flow, roll it into a collar trade by adding protected put options, that would be perfectly fine with me. And if you don't know what a covered call is or a protected put option or a collar trade, that's why you have us to tackle trading. I'm not here to teach in the market recap video. We're here to talk about what traders do. Go research that over there at Tackle Trading. There's a tremendous amount of videos on covered calls, protected put options, as well as protected covered rights, collar trades, all of those wonderful words that nobody really understands, but we traders love saying and love doing as well. Let's move right into the S&P 500 now. Shockingly, another update. Let's face it, I just think we should all put a banner out there, no more down days in the market, which is good for all of us investors, and certainly good for me as well, as I am an investor as well. But seriously, no more down days. Let's just take it out of the equation. Let's just, central bank, Janet Yellen, Wall Street, let's all come to an agreement where there will be no more down days. We don't care about inflation anyways. We print more money than God. So let's just say no more down days. Everybody makes money. And when I mean everybody, I mean investors and corporations and Wall Street, not necessarily Main Street America, because let's face it, the central bank doesn't care about that. So let's just jump on the gravy train here. No more down days. Everybody go out to Twitter, hashtag no more down days, at Tackle Trading, at MattJustice13. Let's make that puppy trend. No more down days in the financial markets. Markets broke out last week. We talked about that in multiple market recap videos from last week. It is a legitimate breakout of your trend line. The question that we all have in the marketplace is, can it sustain this with the magnificent overhead resistance of 2100? But it's not only that in the S&P 500. If you're actually looking at the Dow Jones as well, you're bumping your head right into right here at 18,000, which is a very significant price level for that as well. And what a historic move in the last month and a half, 2 months has been in the Dow Jones, the S&P 500, and the other indexes out there as well. So I'm looking at I'm looking at the market right now, and I'm just saying to myself, okay, is it going to break out? I don't know. I'm still going to cash flow. I'm not looking to add to investments right here at the highs. I'm looking to sell call options to cash flow at the highs. If it breaks out, fantastic. If it doesn't, I'm cash flowing anyways. Take the risk out of the equation. Let's reduce the risk. Let's cash flow, cash flow, cash flow, cash flow, cash flow. And again, no more down days, especially if we're cash flowing in the market. So my guess is as good as yours on whether or not resistance is going to be broken. It is major, and if it does get broken, guys, that is significant. You can't deny it. I mean, we're talking head and shoulders over here before the collapse in August, September, and now we're talking it breaking out of the M formation that had in November and December before the collapse in January. If it gets above those levels, that's significant. That'll put us back into some degree of bullish capacity, whether that's slightly bullish or bullish. That's for everybody's own individual bias to discuss. But I don't think even the most raging bear has to be hibernating at this point. I mean, there's nobody, and don't get me wrong, guys, I have not come off my long-term projections on the S&P 500 or interest rates or the next bear market. The only thing I'm suggesting is that might have been delayed with what the Fed has done recently, based on what they have done with interest rates recently. So we have to be able to adjust to those things as well. And even the most bearish of candidates have had to be closing out of trades over the last week, 2, 3 weeks, as it continually broke out a resistance level in the Dow and back here in the S&P 500. So if it broke out, as it broke back up above this resistance area right here, at that point, bears are going to call off the dogs a little bit. Once it broke up above this major level of resistance at 2000, bears are going to pull off the dogs a little bit. And then it comes into this ultimate resistance zone on this trend line right around 2150, 2160. Breaks out of that point, bears are going to pull off the dogs a little bit. The only thing the Bears have left remaining is 2100 and ultimately 2135. So this is their zone. If it ever breaks out above there, every bear is going to be running for the hill, which means they have to be closing their bearish positions, thus buying stock, buying S&P, buying Dow, buying Nasdaq, buying RUT, you name it, which will drive the market up even higher. Which means best case scenario is you break out and you run on it. But where and for how long is always the question. That's why cash flow is king. Once again, hashtag no more down dates. Breaking out. Okay, moving on. Let's go into the dollar here. Dollar, talked about this last week, talked about it the week before, talked about it the week before. I am bearish on the dollar. I am bearish on the dollar as long as crude stays up and the market stays up. And as long as it stays below 95, this is a shortable opportunity right here. And this is why I absolutely love technical analysis. In terms of the patterns, the price action, these downward movements in here, if you'll look at this downward movement from, we'll call it top shelf, we'll call it 97, we'll call it 97.75, we'll kind of split the middle there. 97.75 to 95 is about a $2 movement to the downside. Well, actually, excuse me. That is 99 down to 95. You're $4. So we have $4 downward movement in price, and then we go from 98.5 down to 94.5, and that's another $4 movement. Then we go from 96.5 down to, we'll call it like 93. We'll give it some justice, 93.5. $3 movement. Okay. Well, what you're seeing is very consistent price movements, but now it's starting to slow its momentum down. And you can really see it from the support levels, no doubt about it, but you can also see it from the distance in the candlesticks. Big candles down. Big candles down. Big, small. And so you're starting to show slowing momentum on your candles, and that's a little concerning for the bears out there. Got a little bit of retracement back up into resistance, downward movement in price. Because of the slowing momentum, I am going to shift from a bear to a slight bear. We still have a downtrend. Pull off the dogs a little bit. Let's give that a slightly bearish bias. So we're giving the market a slightly bullish bias. We're giving crude oil a slightly bullish bias. We're giving the dollar index a slightly bearish bias. And then we always like to look at silver and your commodities. We talked last week about the breakout of 16 being significant in silver, and I maintain that. Silver breaking out right here. We still look good on silver being above 16. If it ever drops below 16, don't fret. Buy put options instead. Take the risk out of the equation by adding insurance to the position. VIX at 13 means market's not worried, guys. That's what it means. We can talk economics, we can talk interest rates, we can talk market projections, we can talk all of that. But with the VIX at 13, regardless of all of that, the market is not worried. Period. End of sentence. However, it also means options are cheap, which means if you need to buy protected put options on your retirement, that's also cheap as well. So keep that in mind if we ever do start breaking down. Now, moving on to earnings. Earnings is obviously this week. We have hundreds of companies reporting earnings this week alone. If you ever want to find out a very simple way to determine how many companies are coming out with earnings. I like finviz.com. I go to where it says screener, and then I always just like to look at the big cap stocks. I like to look at large cap stocks and above. And as you can see, in terms of earnings, let's go this week. In terms of earnings, we got 107 companies reporting this week alone. But let's look at today. Today we had a couple big ones. Today we had Netflix and IBM. Netflix and IBM were two of the big ones that reported earnings here today. Let's see how they performed. Let's first look at Netflix here. Netflix is on the tackle 25. I do own shares of Netflix as well. And Netflix reports earnings. And in the Netflix earnings report, they had an absolutely amazing quarter. First quarter of the year had added 6.7 million net subscribers. They basically have 81 million subscribers worldwide. 40% of their subscriber base is coming from outside the United States. It's just that an absolutely amazing quarter. They made money. Let's see. More than 40% of Netflix subscribers are outside the U.S. Investments in international markets contribute to a decline in operating income from 97 million in the first quarter of last year to 49 million this year. So basically, they had a decrease in expenditures this year, doing some great things. And yet, what happened? Boom. Gets absolutely punched in the jaw. And the reason it got punched in the jaw is not because of their report from the first quarter of this year, where they added 6.5 million new subscribers to 81 million worldwide. It's because their expectation for the second quarter of this year was a little bit of a decrease down to 2.5 million subscribers, and a lot of that has to do with their new content that comes out. They had the Making a Murderer come out over the course in December. That added a ton of subscribers coming into the first quarter of this year. You had the third season of House of Cards. You had what was some other? You had the second round of Daredevil. You had the Fuller House. I don't know what it. Fuller House, something along those lines. So you had all these new content come out in the first quarter. And the reason you have a lot of subscribers is people see that new content, like, hey, I want to be a part of Daredevil. I want to be a part of House of Cards. That's why adding these types of shows to Netflix was so important over the last few years, really kind of driven through House of Cards 3-4 years ago. And as they continue to do well in that arena, you're going to see Netflix continue to expand. Coming into next quarter, they're looking to see a decrease in that down to around 2.5 million subscribers next quarter. So that's why they saw a tremendous move at one point, 11% to the downside. It has responded off the 92 lows all the way back up to 100. But my guess is as good as yours. That's why you add insurance to the portfolio before the announcement, ladies and gentlemen, so that you take that risk out of the equation. We talked about Netflix specifically on the podcast last week in adding insurance. The next one is IBM. IBM, however, responded very favorably at first, running from about 152 up to 156 in the seconds after they announced that the revenue. They reported a revenue of $18.7 billion, which is down 4.6% from year earlier quarter, which means first quarter of 2015. They're down 4.6%. They did report good earnings per share at 2.35, which was above the assessment of 2.09. You can see that earnings per share right here at 2.35, which was above, very good, very well above the expected EPS of 2.09. However, down 19% year over year is earnings per share. That just continues a wide range of negative movements from an earnings perspective on IBM. As you can see, last time, boom, down. Next time down, next time down, and now we're into this one here, and that's expected to drop down into this range as well. I'm a seller on IBM right now, based on the report, based on the expectation. I'm not too concerned about Netflix. Still cash flow, still add put options, and if you own IBM, wouldn't be concerned about them either if you're cash flowing and you're adding put options to that as well. I don't own IBM, so I can't say that. But since I don't own IBM, I'm a seller here. It's a negative report. It's a negative review. It's a negative impact reaction to the report as well. And unlike Netflix, where it had rebounded on the after hours, this had not. See, Netflix came down like this and rebounded back up to 100. This is at the low point. So if I had to suggest this right now, and again, there's an eternity between now and tomorrow morning for IBM and Netflix. There's no doubt about this. But reading the tea leaves as I see them right now would not shock me to see IBM continue to move down off the open tomorrow. And Netflix is a wild card. It's retracing intraday. Who knows with Netflix? It could go right back up to 110 tomorrow. It could go down to $90 tomorrow. Nothing would surprise me. But I would say best case on IBM is stagnation after that comes to 144. Hopefully maybe come back up to 146 to 148. To me, though, reading that kind of the price action, I see this more as a downward movement price. This is Matt Justice for Tackle Trading, guys. Get the game one trade at a time. Hope you enjoyed the market recap video. Hope you enjoy the detail that we go through in the market recap videos, analyzing the entire depth of the financial markets. Thank you for spending the last 20 minutes with me and with Tackle Trading. And if you like the video, guys, and you appreciate it, make sure you hit that thumbs up button. We do appreciate you guys doing that for us. Matt Justice for Tackle Trading. We're out.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.